Good morning. It is Monday, and Monday is the day when we come to the floor of the stock exchange and ask Jim your Twitter questions. If you have any, send them to #CramerQ. And here's the first one. Seattle Kristen wants to know, did the last few weeks of Netflix rising reflect the Sunday announced agreement with Comcast? Always kind of makes you lift your eyebrow when that happens.
Look, I think that Netflix had a problem with throughput. Don't forget, this is not about speed, it's about throughput. It's about that little circle that you see called the buffer. If you see fewer of the buffer, you'll see more people signing up for Netflix, hence Netflix is why it's going up. Don't forget, they already had to pay some middlemen. Take a look at CCOI. It tells you how badly the middlemen could be hurt by this.
All right, that's true. They were paying Cogent for this deal. Now, Psycho Trader wants to know about WhatsApp, and shouldn't Yelp be a $10 billion market cap company after the price that Facebook paid for them? That is a good question, because that WhatsApp price lifted the bar for everybody.
I consider Yelp to be one of the finest companies in the sphere. Jerome Troppelman, what has Troppelman really done here? He's created both a subscription and an advertising fee. Remember, you get a lot of reviews, and then you need to advertise. But believe me, this is something that I did at my inn, and I have to be concerned about at my restaurant. These are very important device. This is a very important device for everything having to do with service and hospitality.
Should someone buy Yelp?
They should have a long time ago. Now it's getting a little too high.
Now it's getting a little too expensive. And then finally, Jay Schwab LA wants to know why so many Apple downgrades after $14 billion buybacks, and while Apple continues to beat all expectations?
Well, we trimmed Apple for action alerts. Why did we do that? Because the revenue growth just can't be held up versus Facebook, which is what we use the proceeds for, and by Google. Remember, this market wants revenue growth. Now, I think it was important that they bought aggressively when the stock broke down, and that's a good sign. We haven't left Apple entirely. However, revenue growth is king when it comes to tech, and they don't have it yet.
Now, there could be an argument for the contrarian when everybody's jumping out and downgrading. Time to get in?
Apple is an inexpensive stock. That's why we're holding on to some of it. I think it's a value play in a world where we want growth, but I'm willing to sacrifice short-term performance and action alerts in order to be able to say a long game for what Apple can come up with.
All right, there you go. There's Jim's comments on those questions. If you have questions, send them to #CramerQ. That's Jim Cramer, and I'm Deborah Borchardt with The Street.